Happy Monday, everybody. Hope you had a great weekend. Today is February 13, 2023, and this is your Monday market update. Let's jump right in. Last week was the digestion week following the Fed week the week before. Monday stocks started in the red, never found their footing. There are a few attempts at the green, but nothing too strong. The markets were intent on waiting to hear what Jay Powell would say on Tuesday in Washington when he spoke. Coming into the week, the S&P was up over 7%. The NASDAQ was up almost 15%. There was a mix of worry about the Fed speech and some profit taking. As I pointed out last week, the stats teams are all over and in overdrive with a positive start to the year, especially following the negative year last year. The NASDAQ was down 1%, the Dow was down just a bit, and the S&P was down about 0.5%. Quick note that some excesses can definitely be seen poking their heads out again. Monday had Bed Bath & Beyond on the heels of major risk of bankruptcy, more than doubling on the day before finishing up and closing up about 100% on the day, on multiples of outstanding share volume, or in other words, the equivalent of the same shares being traded multiple times. Hello, retail and options. GameStop and AMC were also in play on the day. There was a quiet start on Tuesday before the speech by Powell. The real key was going to be, would he walk back his comments that lit a fire under the market last week? Fed heads Kashkari's hawkish tone early in the morning and the added pushback on rate cuts from across the pond, Nagel from the ECB, kept stocks on ice until Powell's interview. Once Powell began to talk about encouraging trends and essentially it may be different this time, he was not really hawkish, but he did not take the opportunity to walk back anything or push back on the dovish action in the markets. This fed the afternoon rally and stocks ended near session highs. What did we take away from the interview? Essentially, the Fed's going to follow the data, and right now the data is strong. And if that data stays strong, the Fed's going to continue to raise rates and keep them high. And this would normally be a headwind on stocks. Not as of Tuesday. Dow was up 0.75%, S&P up 1.25%, the NASDAQ up almost 2%. Tuesday night was the president's turn at the mic for the State of the Union, along with being a circus by the end with arguing and interruptions. It's not how the State of the Union is supposed to be. But regardless, talk was about the debt ceiling. He hit on a bit of the Buy American idea and a swipe at big oil and the windfall of profits they are reporting. Just to be clear, the Biden administration is saying that we will be off the internal combustion engine in oil in 10 years. But they are irate that oil companies are not plowing their profits into drilling projects that take 30 years to pay off. You can do the math. Regardless, there was a lot of talk, not so much about the Chinese balloon that was shot down off the Carolina coast, but most of the promises are going to fall flat with a divided Congress. Seem to very much be a 2024 campaign announcement. We'll see what comes of that. As Wednesday got going, we once again say a replay of last week's. What one day giveth, the next day taketh away. And stocks gapped lower at the open, and the market digested the Powell speech. No time to dwell on that because 5 Fed heads spoke on Wednesday. And as I mentioned to you, they are all rolling out all kinds of ideas of a 5+% terminal rate and multiple years of high rates. Used car prices did blip up again, not a good sign. The markets fell to close near the lows of the day. The Dow was down about 0.5%, S&P down a bit over 1%, and the NASDAQ down almost 1.75%. As I mentioned about the excess coming back into the market, how about this one? AI or artificial intelligence. That's the most recent stock to bring about the FOMO crowd. I've compared it to the meme stocks, crypto, or I think the closest is the metaverse craze. A few months ago, you may recall, no matter the fact that there was no monetization plan for the metaverse, like AI, investors chased everything to do with it. Very little in the pure play arena, just as it's hard to find pure play in blockchain. It's hard to find it in AI also. Just be careful, as so much money is chasing the few companies that have anything to do with it. Back in the late 90s, the dot-com time, any company that put .com in their name went up big until it didn't. This is replaying. Just watch out. Thursday had markets moving back the other way, gapped higher on good German CPI numbers and Disney earnings. Yes, that's what moved it. So it seems like the House of Mouse may be back on track. Hawkish Fed head speak and yields on the rise turned the markets around by midday, and by the end of the day, the market closed lower, a new low for the month. Retail investors have turned bullish, and those indicators are usually contrarian indicators. The Dow was down about 0.75%, S&P down just under 1%, and the NASDAQ down about 1%. Markets opened down or flat on Friday as consumer sentiment is up. University of Michigan survey showed 1-year inflation outlook was rising again. AI, as I mentioned, is still front and center. Microsoft seems to be ready to take over from Google. Yes, with the AI. Just this news, they will turn their totally underwhelming Bing search engine into the little engine that could. And Google proceeded to give up $165 billion in market cap as they got a cold reception to their AI rollout. We're going to see how that goes. Bank of America did report that the credit and debit card data does not suggest that the consumer is about to roll over. We're going to see if it's everyone. In apparel, Ralph Lauren, for example, had a great quarter. So someone is still spending. Oil had the strongest week since October. News from Russia about pulling 500 million barrels a day off the market, along with continued strength in world economies, is pushing that higher. We're going to see if that continues. The Dow was up about 0.5% for the day, but down on the week. S&P was up slightly on the day and still down over 1% on the week. And the NASDAQ was down about 0.5% on the day, but down almost 2.5% on the week. There are a lot of mixed signals as we move into this week. First, why is the market not down more? A few ideas I have for this. First, the data on the economy seems to show it's still staying pretty strong, so it can seem to handle the higher rates pretty well. Second, the strong jobs number gave the Fed all they needed to swing hard, and they did not. Peak hawkishness may seem to be priced in. So what will we need to watch for? First, watch for the economy to roll over and growth data to fall off the cliff. And second, watch for inflation numbers to rebound. If these things happen, headwinds will be in our faces, and this market will have some work to do. The upcoming data this week and beyond are going to be what determines the next move. CPI and PPI will both be reported this week. Retail sales, which will be very closely watched. Also, jobless claims. Those weekly numbers will be here on Thursday as usual. In case you're lonely, the Fed heads are here to keep you company. Today will be Bowman, just that one. Tuesday will bring Barkin, Logan, Harker, and Williams. 3 voters and non-1 voting member. Wednesday seems to be a day off, but watch for a surprise. Then Thursday we'll get Mester, Bullard, and Cook, and they'll wrap it up on Friday with Barkin, Bow, and Bowman. A busy Fed head week. Next Monday's a national holiday, President's Day, so markets will be closed. Monday market update will come out on Tuesday next week. We still have a Friday planning video coming later this week, so please come back for that. As always, if you have questions or ideas to discuss about what I've talked about today, or just have questions, please let me know. We're going to keep watching the data, and with these videos, I'll do my best to keep you informed about the outcome of the data we're watching. Keep in touch and have a great week.